So I cleared about $40,000 last month using this exact strategy, and you can use it both in the Forex, cryptocurrency, commodities, and also futures market. Now, what we're going to do in this video is going to go over the exact entry and exits, the strategy, but most importantly, the psychology. And I'm going to show you guys even my track record here so you can see my growth over time using this with proper risk to reward. So let's break it down and get straight into it. And most importantly, you guys stay at the end. I'm going to give you guys free access to a community and also some tools that you'll be able to use to help you do this. So let's break down gold from just the beginning of January. We saw this immense amount of buying pressure just as soon as we entered into 2026, right? And, a lot of people could argue that the catalyst of that was, multiple different things, uncertainty or even monetary policy. But I'm going to prove to you why it isn't just that. It isn't just sentiment, but most importantly, this was 100% fundamentally driven. What I want you guys to be aware of is that we are still in a rate cutting year. Because we're in a rate cutting year, we still do have at least 2 rate cuts by the end of this year. Now, why that's important is because institutions usually put in their orders in the beginning of the year, so that way they could start to take profit by, the second quarter and sometimes the third quarter. This is very well known in the stock market. So a lot of times institutions and even the S&P 500 will usually have massive volume coming in January. And as you know, gold seasonality wise, has its highest return in January. Now, why is seasonality important? It's because institutions will base a lot of their volume and pressure of buying based off of what? Things like seasonality and also the timing of the season of the year, right? So usually January, February, March are the biggest time periods of growth just in the overall GDP and also in terms of the market because people are setting up orders. Now, because we're in a rate cutting year, this means that the S&P 500 just naturally for the first 2 quarters would be bullish because we are expecting more rate cuts. Expecting rate cuts means less economic pressure. Smaller rate cuts essentially mean less economic pressure on companies and also on people trying to borrow money, which essentially grows the overall economy. So the first thing I saw was we're in a rate cutting cycle here in January. And also gold's biggest return of the year is usually in January. So this was an easy indicator as well. It doesn't show right now, but volume in futures as well was also very, very big. And then on top of that, usually gold ETFs gives you a slight indicator because of the last video I made, I talked about how usually October and November, there tends to be positions set up for January and February. I was already buying in October, November, and December, which is why January and February for me was such a great month. Now, what I want to also go over here is that we hit a low in ETS in terms of volume wise back in November, and we had been in an uptrend ever since, so that was another really great fundamental indicator that told me, hey, look, this is really good. And the cherry on top of all of this was also Maduro being captured in January, by President Trump and America, which also created more, I would say, not hostility, but more ambiguity and pressure on the overall, I would say, metals specifically. Now, I'm going to break this down here historically because what we could do is we could go look at the daily time frame. And obviously, since we had been buying in November and October here, I just saw this as being what? A fib extension pattern to the upside here. And as we started to take profit and pull back down in December, I did call a lot of buy signals here in the beginning of January to my VIP group. I basically told everybody here that we are going to be buying January all May and that gold is going to be the easiest money that you could ever make in trading history. And it proved to be so, right? So all I did was look for potential buys in the zone. And, you could actually go back and look at all my live streams, all my entries and exits that showcases how much I'm up, obviously with gold. You can also see my track record right below where I can prove to you that I've been buying in September and October, just specifically gold. And the reason why was because of just ETFs and seasonalities and other fundamental indicators. Now, once I saw that we started to break structure right around this zone here, and we were moving into some sort of level of accumulation, out of accumulation, because I would consider this Wyckoff theory accumulation, I saw this as being the indicator of a break of structure. So this would be the first impulse move for the correctional move. and this would be the second impulse move. Once I saw that, obviously I looked for potential buys around this zone, but I also called a buy live, on my live sessions on YouTube, which you can get access to here, and they're free every single week. And then after that, we ended up calling buys here. Now, from this, we had an incredible amount of volatility. Now, I'm going to break down the exact step-by-step structure that I saw that also helped me continuously buy and look for pullbacks on gold. But we saw an incredible amount of volume here. The amount of volume that came in was over the average daily range, because usually gold only moves about, anywhere between, I would say, close to, 900 to 800 pips a day, which is still ridiculous. But we started seeing it move about 1,000 to 2,000 pips a day on average. So usually when you see things like that, it means that obviously not only is there a lot of fear and ambiguity, but also there's a lot of volume and people rushing to buy gold. I mean, institutions rushing to buy gold. And specifically, you could see the biggest accumulators of gold right here in the ETFs. Clearly, you could see that China was buying a lot. Even BlackRock was buying a lot of gold here. So, I mean, this was a clear-cut indicator that gold was going to be moving to the upside, and positions are being set for the beginning of the year. Now, what I'll do is I'll actually break this down for you. As I saw this break of structure here, this was back in December, in this break of structure that happened on the 2nd, this to me was the indication of, okay, we're going to be looking for another potential buy here. And another thing was that I didn't see it, even though I saw some swipes of liquidity here, we didn't see a break of this impulse move. We never saw a closing candle below this impulse move. Because I saw liquidity sweep, this right here is a legitimate, okay, wick-off theory, and you could look this up. It's called accumulation and distribution, but this was straight accumulation with swipes of liquidity to the downside. Then after I saw this break of structure here on the lower time frame, this to me signifies that we are going to be moving to the upside. We're going to have an uptrend. So what I did was, all I did was look for a fib retracement, okay, and then an extension. I knew that we were going to go to at least the 1.27 and also 1.414, okay? So theoretically, we would take profit at the 1.27 here or the 1.414, which was right here. And that's what we did. So I'll break down the exact areas and entries that I got in. Obviously, you could see this marked up right here. So let's break down now the confirmations that got me in this historic run and buys at the low. So the first confirmation was number one, fundamental, right? We had a lot of fundamental indicators, and I can go off on not just monetary policy, on option trades, on seasonalities, on ETFs, the Maduro capture. I could even talk about the VIX, but there's so many fundamental indicators that told me, hey, look, gold is going to be bullish here. It's not just because, okay, Maduro was captured. It was mostly because of the fundamental indicators that we teach inside Trade by Design. Second reason was structure, right? So we had always been bullish on gold here. So in my last video, I broke down exactly the law that was passed in 2023 that made gold basically required by banks. And you can check out that video in the description where I break down how I made 16,000 bucks in a week. Okay, that law has never gone away. So I look at gold as being now the new S&P 500 in the market. And because of that, our structure is always going to be bullish long term. Now, you are going to have, certain quarters of the year where it's bearish, just like in seasonality, but we're looking at more bullish price action just long term. So what I was also looking at was, okay, fundamentals match that bullish structure. We're also just breaking structure, which means we just broke, okay, this 4-hour area on external structure, which means we're bullish. And the third thing that I looked for was the pullback. So I always look for a pullback around an institutional candle, okay? Or what I like to call a footprint candle, okay? Now, these footprint candles, they pop up multiple different times throughout, let's say, when you're trading. But one of my favorite ways to be able to kind of take a look at these candles is I'll look at structure and I'll see areas where buying and selling pressure usually comes. And one of those areas would be here, primarily just on external structure. I could already see it. It's this area here. It has the most amount of buying and selling pressure, this specific area. Okay, I would call this an external buying zone. So this area was an area of interest that I looked into here right around the beginning of January. And this is one of my best buys here. And then another thing that I take a look at is, let's say, how it looks on the lower time frame. So on the lower time frame, you could see that, hey, look, this specific area here, okay, didn't really break this structural point. I would say this external buying zone. So now what I look for is, do we have a break of structure? I always look for, hey, do we have any type of breaks? So once I see this pullback, what I could do is I like to zoom in and then look at where price could potentially swipe liquidity, but respect that area and not close below it. It did that right here. And most of you guys know this is I like to trade the Asian range. I would treat the Asian range not as an absolute buy or selling indicator, but there's two different ways to trade it. And for me, the theory and the way that it goes is very simple, right? Usually we swipe liquidity during the Asian range and then move to the upside or downside depending on where liquidity was swiped. So I'll give you a prime example here. Let's say price, during Asian usually accumulates, and sometimes we'll have a swipe of liquidity to the upside. Now, what does that mean? Institutions and these banks want to swipe and take our money, and they'll create these fake breakouts, okay, to make you buy and to get rid of the majority of retail. So when they do that, they'll swipe liquidity, trigger all these orders, all these stop losses, buy stops, sell limits, and then screw all of retail over. And then usually the closing candle, which is real price action, will usually close on the 1 hour or on the 4 hour below that area. When that happens, okay, based off of the principle of the Asian range, it usually means that a market direction has been what? Has been established based off of the closing of the Asian range. So then what I look for, and this is what I always look for, I don't try to get to the top or the bottom of the market because that would be ignorant. It'd be stupid. It's like trying to catch a falling knife or, a rocket ship that's moving to the upside. All I look for is once market direction has been established, I look for a pullback and then an institutional footprint candle to then what? To then move to the downside. Okay, very simple. That is my entire way of trading with the Asian range. Now, some people, there's a second way to trade it, and I'll show you guys that very quickly. Second way to trade it is a lot of times people will just trade the highs and lows of the Asian range, right? Buy at the bottom, sell at the top. I don't necessarily like that strategy, but I sometimes use it if I see a swipe of liquidity. Now, in this scenario, we can take a look at this and the strategy comes into play. Let's go into the 1 hour time frame. On this specific day, pretty sure on this day, I made like $5,000. We saw what? We saw the Asian range right here and that swipe of liquidity right here perfectly at exactly around 7 a.m. We saw that swipe of liquidity. And for me, that was an indication of a buy. Why? We swiped all the liquidity that had been accumulating over the day previously. Also, it looked like we were breaking the Asian range, but we didn't. So we also got rid of retail traders that were trading support and resistance on the lower time frame, which we can zoom in here and we could see, right? All the retail traders that were trading support and resistance over here, right? All these traders were probably like, oh, support and resistance, support, support, support. Whoop, swipe of liquidity, trigger more stop loss orders here. So then after that, what I saw that I thought was very powerful, and the reason I called the buy in a live signal here was that swipe of liquidity. That swipe of liquidity was confirmation without a break for me to start buying. So as this is being the impulse move, I called another buy around this and I started to hold price. And I held price all the way up and I swinged it all the way up till the next day. And this is what I did consistently throughout the entire month. And I just started trading the Asian range. So again, remember that entire strategy that I just showed you of the Asian range. Look at this. You see the price accumulating, then break out of the Asian range. And then what did I do? Once I saw a break of the Asian range, I saw it pull back. I saw a footprint candle right here on the lower time frame, and I took another buy here. And I called this also out live in my Discord group and also on my YouTube live session. I got into another buy right here. That made us even more money. Now, sometimes this will work and it won't work all the time, okay? I started to take some profits right around, I would say, this pullback here. Once we get past like 1.62, I start to get a little scared and I expect a larger pullback just naturally with markets here. But this was a supernatural buy that we're going to break down. And sometimes this won't work. You'll see accumulation here. So there'll be times where this strategy doesn't work. Like you could say, hey, look, John, in this scenario, this broke out of the Asian range and then this thing pulled back and then it never really ran to the upside. Well, technically on a lower time frame, this thing did. It broke out, pulled back, gave you another reentry. And then I think I lost a little bit of money on this trade because I ended up holding and then moved my stop loss to break even. And then this thing pulled back and then just got me out in a stop loss. And I still was holding like one other large order here. And then I ended up just taking a small loss and just saying, screw it. Again, you might say, hey, John, this thing broke out of the Asian range. It pulled back and then it never ran. Well, it did run, but it ran on the next session. Again, this is where fundamentals, structure, and also some of the other indicators that I use are huge. Okay, because again, I don't just look at the Asian range. I look at pullbacks, footprint candles. I look at structure. I look at fundamentals, the news that day. I also look at specific time areas and psychological time and areas. Okay. So let me go back into this here. Now, a lot of times when this is very choppy, I don't like to trade choppy price action. So what I'll do is I'll just zoom out, go into the 4-hour. And again, we were looking for potential buys in this zone in January. I'll never forget this here. I think this was a CPI or NFP report. I can't remember. I think NFP was being very delayed. But I saw this here as a swipe of liquidity. Look at all the liquidity that had been accumulating on external structure. External structure is considered the 4-hour. External liquidity was wiped out here. I could only imagine the amount of stop losses that were really hit. And then we moved into the upside, right? Then we started to see gold skyrocket again. And again, I was in some of these buys because I was holding small positions, which is what gave me clear edge. Okay. Once I saw that price never closed below, see this, and this is structure. This is why you need to study structure. Price never closed below this external zone. It might have wicked it, but it never closed below. This told me to buy again. So I sent out another signal and I gave it out to my VIP students in my live session and we got into this buy. As we started to do that, I went back into what? I went back into my fib extensions and I started to take profit at the 1.27. And once I saw that the 414 wasn't conquered here, okay, I said, okay, let me take some profits here. But I was still holding on to some positions. The reason was because I understood that gold was going to rally almost the entire month of January. And then what happened again? I went on the next session. This was Tuesday. You can go look on my live session. I looked for buys again and look at this strategy coming into play. Asian range, breakout, pullback, got into more buys here and we rallied. This was just so amazing because it was constant buys and constant profits here. I think my win ratio for this specific month was insane. Then obviously once we hit this specific area here around January 21st on Wednesday, we started to get some massive pullbacks. For me, I started to take some profit and I started to take some profit primarily because of the fib extension just being overly bought. It just didn't make any sense for me to constantly be holding this. And it was because on the larger scale time frame, we hadn't been able to close above the 3.2, but usually closing above the 2.4 is like absolutely astronomically insane. So it just didn't give me another reason to go back into a buy. And then I just looked for another pullback. And then I saw what the low of the range get hit, another institutional candle. And then I called this one out again live. Some of these I've deleted. Some of these are still on here. And call this out live on the live session and call another total of another 11,000, 12,000 points in the market, 1,200 pips. And then again, we held those buys and we kept holding these buys. Then what did we do? Again, stacked it up, break of the Asian range, pull back into an institutional candle on the Asian range with the breakout right here, then another buy. At this point, once we got to 5,200 and I kept seeing that, you see, even this swipe of liquidity, I called a buy here and it was happening astronomically fast. I knew that this thing was going to fall. I was very aware that this here in January was just insane, because gold had just ran, from the beginning of January. We could actually take a look at this, a total of 27%. This is a historical run. The gold doesn't normally do this. I started taking some profits, I'll be honest, like right around this zone, just because I was getting scared. Because not scared, I wouldn't say scared is the right word. There's nothing to measure price specifically when it hits areas that it's never hit before. There's nothing to go back off of the history. The only thing you can do is kind of predict. And I don't like predicting price. So all I did was draw fib extensions here and it started to not respect the next fib extension. So then I just took some profit like right here around 4,400. And then I let the next Asian range do its thing. It looked like it was going to start pulling back because on external structure on the 4-hour, we had a nice close. So I was looking for potentially us to pull back right here and then potentially see if we can still ride it up. We did it. And then we had a massive sell-off over the span of just a couple days. I knew that this would happen. And I spoke about this also in my live session. Remember, institutions position themselves just like any other traders. If we have a bullish month, they're usually in, first, and they start to take profit around January, around the end of the month. Usually same thing in February, you'll see this, and you'll see this also with other different pairs. So I knew this was going to be a massive pullback. I just didn't know the amount of volatility that would come from this. I did see that the VIX volatility had hit levels that we hadn't seen in 2008. And there was a lot of rumors of a liquidity crisis happening around this time, which is why so much gold was being bought. Obviously, nothing ended up happening, but that liquidity crisis is what created this huge jump in gold and the VIX volatility. So from there, what did I do? What was my next step? What made me decide to get back into this trade, or what did I do next in order to clear their price? Very simple, guys. After this ended up happening and I saw this shift in structure, I knew gold was bearish. It was just really now looking for, okay, how low we would go till we start to go into more buys, but we don't want to take a guess on it. So what I did was, as we were trading for the rest of the month, I did call some buys. I didn't call buys here, but I was expecting potentially just a quick buy like right around here, maybe trading between the range here to scalp up to this high. And then we obviously had some stop loss hits. Right? My stop loss got hit on this one, right by this one. I was like, okay, whatever, small loss. And then I just kept seeing it have momentum to the selling side and selling pressure. Once I saw that, I was like, okay, guys, this is done. Because if we go on external structure, we're breaking every level of external structure here. And ironically, which is hilarious, you could actually look this up, but JP Morgan banks, and this is how you know the market is manipulated. JP Morgan's position, okay, was right here. One of their buy positions was right here. And you can actually go out and check that out, that one of their positions were closed, their short positions were closed around here, which is why this thing started to rally again. After a huge pullback like that, I know a lot of people lost money just because they're probably not aware of the right type of strategy to be able to use. But everybody in my group, so if you check out my Discord, you could actually see that there was a lot of people that made a lot of money. And we had a flip challenge to take $500 to $5,000. And there were people that took $250 to $3,000, $500 to 500 there was just an incredible amount of people that were able to do this because of specifically January, right? 3,500 today, $2,700. We were just swinging gold, right? All month. And it was because we had the right fundamental news, right? So I want you guys to be aware that when there's opportunities like this, and the next wave is going to come, definitely make sure that you get knowledgeable on this type of stuff, because if you don't, you're going to miss out for sure. And you're either going to make money or you're going to lose money. But this month, specifically of January, was absolutely insane for us. We had so many testimonials of people taking their $200 account or $500 account to $4,000, even $5,000. You can check it out all in our free group Discord. So make sure you're in there. But yeah, this sums up the video. If you guys want access to the exact indicators that I use and the tools that I use, all you got to do is click on the link below and I'll give you direct access to that, and also give you access to a confirmation guide that I use every single time that I get into the market, right? I'm always looking at fundamentals. I'm looking at structure. I'm looking at footprint candles, the Asian range, and most importantly, I'm looking at the right time. So I appreciate you guys for tuning into this video, and I'll see you guys in the next one. Peace.